Okay, yeah. So they draw in trend lines.
Yeah. But when I look to the chart, I don't understand what I need to draw.
Okay, so trend lines. So let's say you had like a drawdown, it like a retracement like it is here, and you want to see that the market is turning. So you want to find out when the market is turning. So what you can do is you connect the high points with each other and just draw a trend line like that. A little bit more like this. And then once the market will stay below this trend line, kind of like it can just be a little to the left, but it will kind of respect that trend line. Maybe we switch up on a higher time frame to show it a little bit easier. Let me actually find a good trend. I think that one was already. So here, this is a little bit, because on the higher time frame, you have a little bit more space and it looks a little bit nicer.
Yeah, but this is what I look in the go live. But when I go on the chart, I don't look 10 days in the past. I look what is happening now.
Okay, so let's say we want to keep on buying. So you can draw your channel from any high point. So this whole move basically started down here, right? This is where the market started to change. So you could draw a trend line like this, and it's your channel of the peak points. Or you could start at this high point. It doesn't really matter. It's just it's just a drawing a line that you draw to help you out. And then you can do the same thing for the low points. And then you have a channel, kind of. You can do it with those two, and then you can exponent it like that. So then you have a channel. So you can either trade with that, with the lines. That's a way how you can use trend lines. And what the market is going to do, it's going to ping pong around in those channels until it breaks and retests it.
Yeah, but that is not always happening, right?
No. Or it breaks above and then retests it. So what you can do is, if you draw a big channel like this, obviously, it takes some time until it breaks out, right? But let's go a little lower time frame. So those patterns also are called flags, or like triangle patterns. Because if you would draw them over, like they would hit at a certain point. You know what I mean?
Mm-hmm.
So let's actually do it the right way. So they would hit at somewhere almost down here or something, probably. So what the market's doing, that's something Manny Q trades as well. The one guy that was live on Monday. So you could always, like, if you want to sell, wait for the market to come up here. And let's actually see if we have the other. Where's the other windows? Damn. There it is. So you can see every time the market kind of came up, it looked like it comes up to where you could sell again. It didn't, like, the retracement wasn't as big. So from the rules, it wasn't a set trade that you could actually take. So the thing here is, and Ra uses this as well, it's like you just draw this in and then you wait for the market to break either way and test it, or you just trade the trend. Obviously, you have to have the rules then matching. Basically, you don't. That's the thing with indicators. Like, this tool is really there to just show you, okay, this could be a turning point, but you always need the confirmation. You could have sold right here, but this stochastic is like in relevance of kind of like a sine wave. Where is it at? So you got to understand, like, the market always, oh, how do I draw this on here? A second. Yeah, it is. So the market is always moving like this. actually make this bigger. And that's like basically market theory. Like it's called the wave theory. So market is moving always like this, and the stochastic indicator just shows you, okay, now the market is at a point, and you can like draw this to like infinity. This is always what a market is doing. Let me actually try to match the same points, the same height, kind of. So the market is always going to move like this, up, down, up, down. And the stochastic indicator just shows you, okay, how much of that push up was used up. Basically, what you can say is that 50%, like that's the equilibrium, you could say. I think that's what it was called. This is like the 50% line. It's not drawn accurately down here. Ich mach das schon. So the market always is going to move to like the 50% range, and then either it decides if it's going to go the same way and continue like going that wave, or if it, you know, needs to accumulate a little bit more money or distribute a little bit more money. So accumulation happens down here and distribution up there. So you see the market needed to distribute a little bit more before it actually pushed down. So don't get too blinded by the indicators down there, because you never know when the market is turning either way. So what you can do is you draw in those lines, and then you wait for the market to break through it and kind of test it. So I would have not entered the trade here. I would have waited for the retest. So I know we all like look right now at, okay, is the stochastic there? Is the RSI there? Is the arrow there? Is the strength there? The best tool on this chart, I'll tell you, like the best thing on this impulse chart is that you have a moving average that turns the color to just show you, okay, we're going up, because you don't want to trade against the trade. And you have the single moving averages, like this, the exponential is the single moving averages that just show you, okay, we're about to turn. We're about to cross over, because they kind of show you if a trend might switch up soon. Those two down here, this one just shows you if it's a strong trend in either the upwards direction or the downwards direction. The stochastic just shows you how much of that move was already replenished and bought back up again or sold back down again.
Do you know about how many points there are used for the moving averages?
I think this is a 200 EMA.
And
sadly they disclosed it.
Yeah.
And those two should be 50, I think. I think I had it. I tried to max it once. I think I have it on my where is it post? I tried it on my phone as well, but I think it's 50 or 20.
All right.
They never disclosed it. That's the only thing, because you could rebuild it on your TradingView, and I would love to rebuild it on a TradingView, because TradingView is a nice platform. This is the old platform. Like they're gonna release next year, probably. They're gonna release like the upgraded TradingView platform that we're gonna have in the company. So we're gonna have something like TradingView called Quick, where you can easily share your analysis with somebody as well, and also connect your broker to it so that you can trade right away through it, because TradingView only limits you to certain brokers. So I know Raul always trades with the trend lines and drawing it in. I don't know, you have to add something on what I just said with the trend lines, how to draw them in and how to use them. You can also do it in Dutch.
Nou, eigenlijk wat hij zei was wel accurate. Ik ben dit nu al een aantal weken een beetje echt goed aan het bestuderen en naar de charts aan het kijken van wat gebeurt er nou. En vaak heb je altijd, wanneer je een break hebt of een hele kleine retest, er gelijk achteraan en daarna schiet je chart omhoog. Maar vaak zie je ook, zeg maar, dat wanneer je in deze chart bijvoorbeeld gaat kijken, zou die retest een perfecte instapmoment zijn, omdat je weet van een bepaalde stochastic is uiteindelijk daar gebroken. Ik kan mijn machine laten zien. Is een stukje verder.
You wanna get the. You wanna
Can
get
I-
my. Yeah, you have my mouse. Take it.
Click remote. Oh, am I doing this?
Yeah, you're doing this.
All right. Wait.
Mag in het Nederlands, hè?
Oh ja. Oh, er zit
Ik
een
denk
beetje
dat,
delay. Er zit een
denk
beetje
dat-
delay achter.
Ik denk dat het vraag van de meeste is, vanaf waar trek je die lijn? Is dat vanaf wanneer de trend omdraait?
Kijk,
Waarom?
daar zijn die pijltjes wel key bij. Waarom? Ik kijk altijd blauwe IMA, waar zie ik rode pijltjes? Waarom? Ik weet dat het dan een retracement is. En hier zie je dat dit een retracement is. En uiteindelijk zie je hier dat die hier net niet onderbreekt. Het net niet ondersluit. Dat is de vorige low. En uiteindelijk, ja, zou dit als price movement goal hier naartoe willen gaan in mijn optiek. En dat doen we gewoon lekker rustig aan door elke keer zo te gaan. Maar dus in deze retracement, kijk ik, waar heb ik de meeste pivot points? Deze is net een klein beetje gebroken, maar dat geeft niet. Want die andere 3 tikken elkaar aan. Uiteindelijk zie je dat dit een candle break is geworden. Dus dan zet ik altijd gewoon een horizontale lijn. Waar die eigenlijk mooi eruit is gebroken. En dan zie je dat die retest richting dat punt is gegaan. Prijs is er tegenaan getikt en is daarna naar boven gegaan. Vaak heb je dan ook nog een tweede retest, niet altijd. En ik zie altijd, wanneer ik zie van de candle die hier naartoe gaat, als die onder de support sluit, neem ik de trade niet. Als die erboven sluit en prijs is daar naartoe gegaan, neem ik de trade wel. En je ziet ook, zeg maar, dat hier heb je minder zekerheid, omdat die MA's nog best wel ver uit elkaar crossen. Maar hier zie je dat ze heel dicht bij elkaar zijn. Dus dan weet je dat als je weer een sterke RSI switch krijgt, net zoals het hier gebeurt, net zoals het hier weer gaat gebeuren, zou dit een meer zeker moment zijn van je kan een upwards movement pakken. En als je het even wat meer vergroot, zie je dat dit best wel grote candles kunnen zijn. Je stop loss zou dan ongeveer hieronder zitten op het einde van de Bollinger Band. Is best wel een grote push uiteindelijk. Zou denk ik een 1 op 2, 1 op 2,5 kunnen zijn. Dus dat is eigenlijk het enige wat ik een beetje erop wou toevoegen. En die lijnen, je kan geen foute lijnen zetten. Mensen zetten soms ook de lijnen op de WIX. Ik vind het meer accurate voor mij op dit moment door het op de bovenkant te zetten. En je ziet zeg maar alleen maar pijltjes omlaag. Op een upwards trend. Dus vaak is dat een retracement, eigenlijk bijna altijd. En dan wanneer je zeg maar die break naar boven ziet, weet je, oké, we gaan niet verder naar beneden breken. Maar wanneer die van beneden breekt, ik teken deze lijn vaak niet eens. Deze lijn laat ik ook heel vaak gewoon weg. Waarom? Het heeft voor mij geen toegevoegde waarde om te weten of we naar beneden breken. Want dan teken ik mijn trade gewoon niet. Omdat we hebben een blauwe EMA. En die blauwe EMA is gewoon key, wat Chris ook net aangaf. Dit is gewoon de beste indicator die je gewoon tevreden moet houden. En die MA's, die kunnen heel veel betekenen in wanneer je zo'n retest hebt, in een zekerheid of wanneer je zo'n break hebt. Als deze MA's kleiner waren bij elkaar, korter waren bij elkaar, zou ik op deze candle ook zijn ingestapt. Ondanks dat die pijltjes nog rood zijn. Waarom? Ik zie dat het gewoon een goede break is geweest. En zelfs dit kan je zien als jouw eerste retest. En daarna is de prijs weer omhoog gegaan. Dus bijvoorbeeld, ik weet niet of we een downtrend kunnen vinden. Met upwards. Oké, dit is een stom voorbeeld. Want ik hou er niet van om de IMA te traden. Want hier zie je rood, blauw, rood, blauw. Dan weet je nooit wanneer je tegen wat in moet traden.
Did that answer your question though, bro?
Who has a question?
Niels. Mitch, sorry.
Mitchell.
Yeah, Mitch. Niels popped in with something then.
No, not really. to be
Oké,
Okay.
welke trend zaten we? Weet iemand dat nog?
You
Yeah.
don't like basically you say you don't know how to draw it then, right?
I know how to draw it, but I don't know what to do with it.
Okay.
Um,
Let's switch up to away from this impulse tool now
Yeah, you can.
because
How can you take over?
I just
Oh,
take it
yeah.
away.
Great,
Because
good.
Luciano had some questions, basic questions as well that we can just use on any kind of chart. So there's multiple ways to get into trades. So there is the key thing is though you always wait for that breakthrough and that retest, because trading is not like getting in right at the point. Like there is something called buy stops. I'll tell you one thing, I never use buy or sell stops. Buy or sell stops is, let's say the price is down here and we wait for the price to breach. And once it goes through, you're like, when it goes up, it's activating the trade. I never do that because it could just go up and then down. Stop loss hit. There you go. Simple as that. Never use buy or sell stops. Like that's like, if you want to go into a trade, then market execute or work with sell and buy limits, because that's the better way. And that's basically how to get in. So there's multiple ways to find out what to do with trend lines or anything like that. Trend lines is just a tool to help you visualize what's actually going on in the market. So let's actually go to a forex pair, something nice. No, this is consolidating.
Can I ask a quick question in the meantime?
Yeah, sure.
Like when you are drawing the retracement line above of the candles in the uptrend, the tips of the candles, is there a theory behind that why it wouldn't break out in the first few times?
Well, the theory behind it is that people jumped. Well, basically, we got to start drawing board quick. So basically, how trend lines start. But I'll tell you one thing: you got to understand this to really long-term trade with it.
Yeah.
So there's certain market structures that people just love to trade. So you see this. What would you do if you see this? Like when the market, let me actually draw it back. Like when the market is right here, what would you do? You probably will look for sell, right? Because it started to retrace a little, and some people like just double tops and sell. So what people do is they place their stop loss above here and they start selling. This is called swap retail patterns. So other people think, you know what? If it comes back down in this area, I'm going to buy it. So they place their stop loss here. Market is moving down. And they think, okay, now let's get into this buy trade, right? So they would buy the market. I'm just going to move it next to each other because I want to show you something. Because that's the whole theory behind trend lines and stuff like that. They would place their stop loss below here. The big players in the bank are the banks, right? We already went over that in one of the first calls, that JP Morgan makes up like 13% of the whole market or 10% of the whole market in a month. So they want to make money. You want to know what they do. So basically what the bank then is doing, they want to always buy for the best price and sell for the best price. So you could then, in this example, you can't really draw a trend line, but what you can draw is something people like to draw a lot as well: support and resistance.
But this is only for a higher time frame, right?
This works for every time frame, bro. I can show you some examples where you see it as well. This works for everything because it's a basic concept. Because the higher time frame is just, let's say the 15-minute chart is just 3 5-minute candles put together in one candle. The 1 hour is just 12 5-minute candles in one candle. So basically it's the same thing. It's just you see it later on the higher time frame, but earlier on the lower time frame. It's just a different perspective, and it needs to match like the way you trade. So what happens then is, what banks like to do is, well, they're going to go up, take out this liquidity. They're going to go up. People lose their stop loss. And then they push down. Maybe those people didn't take profit yet, or they go for down first. So either way, the banks do one of the two things. They take out stop loss, and go down. I'm gonna switch the color here for like option number B, option B. So either way, both stop loss got hit and the bank got what they wanted. This works for the same way other way around. Like if you would invert this, it's the same way around. Doesn't matter. It's just different perspective. So what you need to understand is, where is liquidity? Where is where is the money in the market right now? So I hate Swiss franc. We're not gonna analyze it. Let's go with Euro JPY. So
Why do you hate the Swiss franc?
because the Swiss franc used to be a super stable currency. Right now it isn't either, but like now you have like nice market structure, right? But like Swiss franc, like look at this, like it didn't really move a lot, you know what I mean? Like if you want to do shorter trades, what do you want to do? Like, you know what I mean? Like it's just super consolidating a lot of times, and like just small candles. You don't really have always big pushes. But in the last couple of months, the Swiss franc turned really volatile as well. Everything in Europe did. But the Swiss franc used to be like one of the stable currencies. Like it's like it never used to be like this. The Switzerland franc and the euro are almost the same. It's 2 cent different. Like that's like usually it was way different. Like if we go back, because the Switzerland franc like was always worth more than the euro. Oof. Look at this. This is like 06. I don't want to go back this far. Just the last 2 years, or last 4 years, basically, the Switzerland franc dropped so much in value. And I don't know. I don't like the pair. I can't trade it. Never really worked out for me.
Okay.
So let's see. Let's do Euro JPY. So yeah, so this could be an example. I'm just trying to find an example that fits the purpose of the liquidity grabs, because this happens quite a lot. I have an example, but this is like old, but I can actually show you because it happens to me too.
Can you explain a little bit, like what is the meaning of liquidity?
Yeah, I will. I just want to find the right example. There it is. So what I did, let me actually go to 1 hour. I think I deleted like my setup a while ago. So I was looking at this market, Euro, British pound. And this is, I think, exactly the point I was looking at. Was it? Let me see. Maybe it was even an earlier trade, but I think it's right that one. So yeah, this is right that one. So Euro British pound was dropping really hard. So I was looking for the point of where should I get into. So I didn't really look all the way back there. So I had my entry placed down here. I was looking at this zone because this block has been a price that hasn't been mitigated out of. Mitigation means it's empty pricing. Like the market pushed up, and then eventually on the 1 hour chart, it broke the market structure right here and then started consolidating. So I knew, okay, the market will return to this zone and I'm going to place a buy limit somewhere in this area. Let's say 50% of that zone. And I placed my stop loss just below the low. So my money lies here. That's liquidity. Liquidity is basically where people place their stop loss, because if I lose my money, somebody else will win it. You could technically say, or it goes in the market. So then people started also selling at this point, at those points, because they thought, you know what, it might go lower. So people looked for the break of structure in the other direction. For example, this is the higher high, higher low, and it broke the structure, created a new low. Maybe people didn't get in yet, but then it went even lower and people got in on a retracement. So let's just say people started selling at this price level with the stop loss above the last significant high. So what then happened is you see the market was consolidating and all of a sudden, boom, I got stopped out, and then boom, it shot up. Everybody else got stopped out because everybody else was like aiming probably for this level here, maybe even lower because they think the trend will continue. Because if you zoom out, you could think, okay, it might go even lower. And let's say I aimed for this high as well. I don't have the trade in anymore, so otherwise I could tell you exactly. But what happened is, as you can see, the market got manipulated, pushed down, took out stop losses of people that placed their stop loss just on those levels. Could be anywhere. And then it shot up, took out the people that were selling. So it's just a different way of saying the banks don't want you to win. Liquidity is always at zones where you see like a market is moving sideways, you have a battle between buyers and sellers. Because some people are buying at the same point and some people are selling at the same point. Now, liquidity is where people place their stop losses, where the whole market is basically having money left over. That's where a market wants to go, take out, and then move in the opposite direction. So you see sometimes things like this, the market spikes up before it then pushes down. I showed you the gold trade. Let's go to today. On a 15-minute chart, it looks different. So on the 15-minute chart, it looks like this. Got in, and then it shot up, and then moved down. My take profit was hit, but I got stopped out first. But it was a news hit as well.
Is your
So-
time on UTC +1? Yeah, sorry.
Yeah. This
That's
is
for
like
what time were you stopped?
my stop loss was right when the news hit 2:15. That was GDP. No, ADP, non-farm employment change, and then prelim GDP. Those two stuff. Like I think this one stopped me out. This one stopped me out because it was positive for the US dollar. And this one was the push that went first down.
So if I get it right, the banks and the big players on the market, they expect it to drop. They first push like the higher the demand, so the price goes up, and then the news comes and it shoots down again.
They
What-
don't expect it to drop. Here's the thing. They
They
make it
drop.
drop.
Yeah, exactly.
So they push it into the price zone where they want to. I'm just looking. Gold was a good example for where was the GDP news? Or was it FOMC news that I was that I think it was sometime in the summer. I think it was this was the other one. But I think I analyzed this one actually. I just deleted my chart like from time to time. Yeah, not even, I think it wasn't even that one. But anyway, the thing is like those spikes, we could go back to November 2nd and I'll guarantee you this was a news. This was some kind of news that happened for the market to push up and then go down. So people were selling at this price point already because people expected the market to fall further. But the thing is, people don't know where to place their stop losses at. That's like the major thing. If like people don't know where to, like, let's say you got into this sell somewhere because it broke the market structure, and you got in. People don't know where to place their stop loss. Let's say when it broke the market structure, like this low area, you got in here somewhere on the falling market. You would place your stop loss right there above the high, right? but it's not the significant high. So that's the point sometimes, like depending on what asset you trade, you need a big stop loss sometimes. You would have been safe if you placed it, you would even have to place it higher. And that's the point when it comes to the time frames, what you asked. You have to look at the bigger picture to see what actually is a point of interest in a market. So what I always do is, I just wanted to have a clean chart where I don't trade. Damn, I got like, let's actually go with something nice. USD, and just delete everything that's on here. Boom. Okay. So this is the 4-hour chart. This market, what way is it going? Who knows?
Thanks, Buddhas.
Somebody know what we could expect of this market?
Makes a higher high, I think.
Mm-hmm. Depending on where it's stopping, like if it's breaking this level, then it's confirming that, you know, it broke a major level, because this was also manipulation. This was just a straight drop on the 4-hour chart, and it probably doesn't look any different on the, well, this was the 27th Sunday, yeah, when market opened. Yeah, this was right here. This was Australian market opened at that time, and it just got dropped. So if it punches this level through, because there's a consolidation in this range, when it's closing above this, we could expect the market to then struggle with this area and then go down. So I always look at the higher time frame. So right now, I would be actually waiting for a retracement to actually buy it, because I'm not interested to try to sell it somewhere here where it's not really giving me any indication. It already accumulated at the bottom to go up. It accumulated down in this range, and then it came back down to accumulate here again and confirmed to push up. So accumulation distribution is a really important thing, because a market will always do the same kind of things. It drops, then it accumulates, does some price action, and when there's enough money, it breaks the structure and goes up, creating higher high, higher low, higher high, higher low. Then it's at the top, and it's starting to price action, gather money, break structure, high, lower low, lower high, lower low, and so on. This pattern like always repeats itself. It just looks different a little bit. It's depending on what price, what time frame you're looking at.
Can I
And this-
maybe add something to that?
Yeah.
So I think it's maybe you guys can use this for a better understanding. So the bigger players always play limit orders, and they have to fill their limit orders with market orders. And the best way they can do that is by triggering a lot of stop losses at the same place and place their limit orders above or below. And that's the reason why. That's basically the reason why they do it, and why you see the reactions of those levels. So you have to look for liquidity pools at places where there are a lot of highs and lows. This is maybe I can show it next time on my screen.
Kan je het 1 keer in het Nederlands doen, alsjeblieft?
Ja, man, dit komt eens voor
If you want to share, bro, you be free to share. This is why we do those calls. Everybody can put their input in.
Ik ga nu SPX even verkopen. Short SPX, guys. No signals, no financial advice.
Yeah, here's the thing again. What's your indication on shorting it?
Okay, yeah, I'm gonna show it right now. Yeah.
Okay, go ahead. It took out the liquidity over there. I know.
Yeah, so we just had some news. You probably saw that.
Yep.
Oh, I think you have to wait. First I'll just set it up, and then you can share. So I'll just show the example on Euro from today.
Okay, let's do it. Euro USD.
Yeah, man.
So funny, they always look like Euro USD, SPX, they always look so much alike. It's so crazy.
It's similar, yeah. Do you also look at the DXY when you're trading or not?
I'm not trading DXY. I'm just looking at it for implication on what to
Yeah.
expect from the dollar. So this is the US dollar currency index. If it's strong, the dollar is strong. If it's dropping or going weak, the dollar is weak. So that's
Yeah.
what the index is for. People trade that as well.
Yeah, that's what I meant. Yeah, not for trading, but looking at it.
Oh, some people can trade. It's just certain brokers, like they can. Oh, was it not the DXY? It was the what's it called? The liquidity index or something. What's it called? I can't remember, but some people are trading funny indexes. So what Xander was saying, I can explain as well. So here you can see a lot of highs and lows. This is the price range. That's what I was saying. Like, people battle in this price range for the market to go either way. So you see the market is not moving anywhere price-wise. It's stuck in this box. And then until one party wins, it's dropping out. And then you usually get the retest because, like Xander was saying, banks still have their orders open in here. So they push the price back up to close their open orders, and then it moves back down. And then it goes their order.
Maybe I can show it on my screen.
Oh yeah, you can share it. It's open to share. 1 second.
Yes. All right. You see it?
Mm-hmm.
Great. So this is today's range from Euro USD. As you can see, I've got an indicator that indicates swing highs and swing lows. The best on 15-minute or 1 hour time frame. I can share this indicator as well in the group. And it's also important to be aware of at what times the market opens, and especially New York. You see big moves around the NY Open. Yeah, and I'll just show it to you. So here you have the highs from 2 days in a range. This is, you have to train your eyes as well. That's important. How to visualize a range. So this block, that's just the range. Range highs, range lows. At the highs, liquidity. Everybody that shorts in this range and expects a move downward because the high time frame is downwards. No, not high time frame, but local trend. So everybody in this whole part that expects a drop further puts the stop losses above here, right? Because you're not gonna put it all the way above here. That's not profitable. You know, it would look like this. Say I'm shorted here, expecting something like this. I'm not gonna put it over there. It's not gonna make me money, so I'm gonna put it over here. So everybody who does in this range of shorts puts it over there. Look at this. 15:30. That's exactly the time NY opens. Goes above, it swings at the level, you see, but it can't take a close there. So it closes back below. So this is your entry trigger. As soon as you see the close, you enter short, back down, stop loss, simply above the wick. Look at that risk to reward. Even the range low is 14. Today was
perfect.
1 hour.
It's good.
Yeah, that's it. I can do a more longer version also in Dutch for you guys if you want to.
Ja, het was
Yeah.
wel goed zijn.
That would be dope. Giovanni can do it too, so that would be a cool thing too. Like I said, nobody's bound to the TBX. Like, I want you guys to trade the way it fits for your style. Because Mitch, you said, you know, you get angry if you lose too many trades, right?
No, it's not. I don't set any trades, but I go watch go lives, and then I go try it on my own, and I
And
look
you don't
at
find
videos,
any
and
trades.
I don't find anything.
Okay, good. It demotivates. I know that for sure.
It's not. I'm a little bit done.
Yeah.
Yeah.
I understand for sure. So that's why you know, we can you guys can learn whatever you want. I just need to know. So
This
if
is
you
another indicator I can share in the group. This is basically just daily high and low. You can use this for visualizing the daily trend. And also, what's more important, look for liquidity pools. If you see some daily lows like here, should be a lot of stop losses probably. So just be aware of this zone because there's money here. And they trade, you have to treat it like a magnet, you know? If there's one pool below and one pool high, much higher like this. So say you haven't seen this price, I can cut it off. I don't know.
Oh, you can do it on the left, on the 28th to 23rd, the two highs there, the liquidity pools to the left.
Yeah, yes.
To the
Yeah.
left. Last
Yeah,
week. No, 23rd, 20, the last two, yeah, Thursday and Friday of last week is a perfect example. No, there's Monday, the 23rd and 24th of November.
The highs.
Yeah,
Oh,
the
yeah,
highs.
yeah, yeah.
You can
Yeah,
see
yeah,
here
yeah.
perfectly. You see those two hot swing highs. You know, people place their stop loss right there. And what happened on the last day? The market got pushed up. Everybody
Yeah.
got stopped out.
This one is a bit hard to get in because it's very large, it's very steep.
Yeah, but it's a perfect example of how liquidity gets taken out
Yeah.
in a matter of
Exactly.
a couple of
Yeah.
hours.
It's just up and back down.
But
Same.
what my question was about the liquidity, like if you were me right now, what would you write down to explain what is liquidity?
Okay,
kan
so
ik dat doen, ja?
you want to say it in Dutch?
Ja,
Okay, perfect.
easier. Oké.
I like it.
Je hebt zeg maar twee soorten orders. Je hebt een market order en een limit order.
Ja.
Market order voegt geld toe, dat is liquiditeit. Voegt actief geld toe. Actieve, zeg maar, liquide, gewoon het vloeit. Dus daarom is het liquiditeit. En een limiet order die neemt liquiditeit, snap je? Begrijp je dat? Zeg maar, als ik een market order plaats, dan heeft die direct invloed op de prijs. Want het zit in de markt, dus het zorgt voor beweging, snap je?
Ja.
Maar die limiet order die staat daar, die rust daar totdat de prijs daar komt. Begrijp je? Dus kijk, stel, ik ga nu instappen. Stel, ik gooi nu 1 miljoen voor een long voor 1 miljoen op euro. Dan gaat hij toch een reactie geven, zeg maar, als ik 1 miljoen op een buy-knop klik.
Ja.
Maar als ik een order plaats voor dit level hierboven, om short te gaan, dan heeft dat niet nu een impact, zeg maar. Pas wanneer die geraakt is en gevuld, ga je dat merken. Begrijp je?
Ja, maar wat is dan hetgene wat jij zou opschrijven, laat maar zeggen, van wat is liquiditeit? Laat maar zeggen, gewoon in een korte, krachtige zin gewoon.
Ja, liquiditeit is gewoon
Gewoon papo, is gewoon geld.
actief geld in de markt gewoon.
So you gotta think of it. Your trade
Hoeveel
is still
geld er
run.
ongeveer in de markt zit eigenlijk op dat moment?
Ja, dat is meer, ja, eigenlijk wel, een soort van wel, ja.
Dat is meer volatiliteit of zo, toch?
No,
Nee,
volatility is if a market is like jumping up and down, like big swings, like in a certain period of time. Let's say you have a lot of news and the market is like jumping up, boom, 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 boom. You know what I mean? That's volatility.
Maar dat gaat wel hand in hand met elkaar. Zeg maar, als er heel veel volume en heel veel getraind wordt op momenten, dan zie je natuurlijk meer bounces en meer beweging. Snap je?
Ja, is moeilijk dit, man.
Ik ga het nog een keer, zeg maar, kijk, ik ben geen expert in lesgeven of zo, zeg maar, dat heb ik nooit eerder gedaan. Maar ik kan wel gewoon iets voorbereiden waarin ik het gewoon duidelijk heb, zeg maar. Want ik heb het allemaal hier zitten, maar om het uit te leggen is een ander level, snap je?
Ja, man. Logisch ook. Ja, het is moeilijk te begrijpen, man.
Ja, snap ik, man.
Mitch,
Ja,
als je voor jezelf zulke termen hebt als liquiditeit, je kan altijd op Google opzoeken liquiditeit, forex.
Ja, maar als je dan gaat lezen, dan ga je weer allemaal termen tegenkomen en zo, je weet toch. Ik denk als het gewoon...
Liquiditeit is in principe, ik kan nu eventjes op Google gaan kijken en ik denk dat ik je gewoon een goed uitleg erover kan geven. Maar snap je, dat zijn zeg maar die dingetjes, je kan het ook altijd...
Think about it like this. Let's do an easy example. Let's say liquidity is, you know, in poker or blackjack, the bank always wins, right?
Yeah.
You're still in the game. You got your stop loss is what money you have on the table. And then you have a losing streak because the bank wants your money. That's liquid. The liquidity are your chips because that's your liquidity in the game. You're still in the game. If you would have quit, so in trading speech, it would be you get out the game. You close your trade in profit. Let's say you won $1,000 and that's your could be your take profit and you get out. And the bank didn't take your liquidity. If you stay in too long and the game changes, so the market structure changes, your liquidity gets taken away. Your money, your stop loss will get hit and you lose. That's like an easy example to think about it because everybody can visualize themselves sitting in the casino, especially in Holland. I know I've been, I've been to some casinos before and it is like, it's always like that. You have a little winning streak, you make some money, and that's when the bank got you hooked. And then all of a sudden on the blackjack table, the dealer always gets the best hand and everybody loses. So that's kind of like an easy example to liquidity. You understand or?
No, not really.
Okay. So
Yeah,
let's see.
I'm just looking on Google too, but
I'll try to find an example. So this was Friday. Everybody expected the market to turn around here because it broke its structure already a little bit. Created some nice lows here. So there's been a lot of people selling and buying at this area. So everybody who was selling, let's say we got in here, they placed their stop loss right above this high. So the liquidity is that point where the stop loss would be hit. A lot of people were also buying. Let's say they bought right at this price level. And they placed their stop loss below this low over here because it's the last significant low. So their liquidity, this liquidity is right at the point where the stop loss gets hit. See what the market did? It took out their stop loss first. And then let's say those people want to make money. Well, they don't want to trade maybe like this. They maybe are looking for 1 to 3. Also, they are maybe looking for 1 to 3. None of those people actually won any money if they didn't take profits out. Because what did the market do? It first went down and you had a stop loss hit right there. So boom, that liquidity is out the market.
but when you did the sell, it would take profit, right?
No, look at it. Let's say we went right in there for 1 to 3. Oh, there it did it. Okay, it did hit a take profit over there. But let's say we even went lower. Let's say we actually want to get for this low here. That's just for visualizing. The bank pushed the price up before it then moved to that zone over there. Because it hit to take profit in the end. But like Xander was saying, nobody wants to have a stop loss like this. This is 74 pips. If you have a 70 pip stop loss, I would like, if you don't go for 300 pips, 400 pips or something, like if you do a stop loss like this, your trade needs to look like kind of like this. Like your ratio needs to be the same. Let's say we aim for 1 to 3 again. This is a big fucking move. You don't want to trade like that. It could take up to weeks till the price gets to that point again. It depends on your style of trading, of course, but then you would have not gotten into this trade here. So just for the visualization, we then had a stop loss hit. Oh, right there, So we out as well. So the liquidity got taken out. So what you want to always do is if we want to do a top to bottom analysis. So let's say we're on Euro US dollar right now. Obviously, I'm trading swing and a little short term because me and Gio were analyzing this together this morning. So we waited for a break of structure. The market broke the structure here because that was the lower high area. It broke the structure. I don't like to get into retracements like this because it's just too close to it. I always want the market to get like a range. So let me show it to you on bar replay. So let's say we right here. We don't see this yet. We don't see this yet. And this one as well. So the market is pushing up. It broke some high levels down here and here. So what one of my mentors always said, you want the price to have some space to where you want to enter, because that's the confirmation. So we would wait. Next candle's dropping. Okay. So we then see, okay, now we have this price zone of this push candle that could be interesting, point of interest. And what I always aim for is like 50% of the zone. But this candle, like I said, is too close to my push candle, right? So I'm not looking at this right now. I'm just waiting a little bit, waiting for this candle to close. This one already created some space. There's already one candle in between. Now this is my price zone that has not been mitigated out of. Mitigation means this is empty price. So this would be a zone where I would look to enter my trade. How I always try to do it is just like eyeball it. It's like I take 50% of that zone. And it sometimes works really well. A lot of times, actually. I don't know why, but a lot of times the market comes to like 50% zones of those kind of candles. So for example, you could also take this area here and we can see later if it already dropped there. 1 second, I just get spammed right now. So then we wait, we would set our buy limit. We enter, we place the stop loss below the wick. And then we wait. Okay. Trade got activated.
So you set a buy limit in
Yes,
this. Okay.
because I set my trade and put the phone away, put the laptop away. And then we wait. Okay, we had some drawdown. We're in profits. And take profit hit. Just aim for the high over here. Or we could also say, let's go for 1 to 3. Then it would have been hit also. That's how I do my analysis. Like I don't try to look at sometimes like what could be next. Well, of course, if I want to have a bigger trade, kind of like the one Xander showed, well, I would look for a zone where price has mitigated out of that might be interesting for the market to move back in. Same concept over here. This let me actually delete this zone. The market broke structure down here, right? You broke, retest. Look where the market came back to retest to.
But what does breaking market structure, what does it mean?
Remember from like the first trading call we did? A bullish trend is always a higher high, higher low, higher high, higher low, higher high. You always go by identifying first your higher high. I'm just going to put it as HH. And then you wait for the market to break above this level because then you have a new higher high. And then you know, okay, my low point that is interesting for me. So this is 1, this is 2, and this is 3, and this is my higher low. So this is the point. Those are the points that interest me because now I know, well, the market, for it to go up, it needs to break above the higher high to continue going up. And if it breaks below the higher low, then it breaks my market structure and it's creating a bearish trend. So this is the break of structure because let's say this is my new lower low then. Right there, lower low. And then the market continues on with creating a retracement and a new lower low. Retracement, new lower low. The concept is the same. You wait for a new lower low to be formed, because then you know that this over here is your lower high. And you go the same way. This is 1, 2, and 3. This is the basic principle of breaking markets, of market structure. So where do you want to get in? Obviously, you want to wait for the break of structure first and then get in when here, this area right here, let's kind of zoom in here. So this area, you want to wait for distribution. This area kind of looks then like the market is creating a, do it with the arrow so it looks cleaner. So this is coming up, right? Creating the higher low. And then you want to wait for signs of distribution, because on the shorter time frame, you have a higher high, a higher low, and then you want a break of structure on that shorter time frame. And then it confirms your trade that the market is dropping. And then you can get back on that little retracement. So
But
this would
in
be-
like in the lines is very easy. But if it,
yeah, let me
in
show it
candles,
to you
it's
here.
so
Let me
much.
show it to you here. So basically, if we go 1 hour time frame, this is the lower low, this is the lower high, right? We can also turn on just to lines just to show it quick, to visualize it. This is the lower low, it broke the structure here. This is our lower high. New lower low, lower high, lower low. I just do the lines quick so that you see the structure, and then I show you. So here, where do I get into my sell? Well, you want the market to confirm its move, right? You always want a confirmation. So yeah, you could have gotten in on any of those points technically, but what's your reason for it? The market was ranging in a channel. So that's what I drew in first, like it breaks out of it and then confirms coming back to that price level of the first push that has not been mitigated out of. And it's a lot of times pretty accurate. Also, because it was one of the questions, you could also use the fib retracement. You could draw from that swing. 1 second. No, the other way around. 1 second. I have. No, I drew it the other way around. 1 second. I never really use it too much, but on this example, it doesn't really work too well. So it overextended a lot. I don't have all the levels zoomed in. This should be the 70 level even out of that whole swing. From that, it's even worse because it's almost 100% correction. But people use the fib levels for that as well. So you could also say, if you go from this point here to where is a good zone to the market should it be returning to? Well, it already left the haven. So this is also something, but I would advise you to watch videos because I don't use fib too much, but that's basically how you draw it in from swing high to swing low to kind of see the levels that might be of interest for you to enter. But I always like to do it like this. Also, there's multiple tools to identify this, but this is basically your break and retest on when to enter with market structure. Same way over here, it broke. I didn't see a good retest for this zone, but it gave me another good zone for here. and got back in onto retracement. And like Xander was saying, a lot of people do this on the New York market open. It's always at 2:30, 3:30, right around that time. I don't know, with the time zones being switched. Yeah, it's at 3. 6 hours difference. 9:30 the market opens for, yeah, 3:30. So a lot of people go at this time and just trade like 3-minute chart and just do the same thing. They just wait for the market to push into such a zone and then just execute there. Even the other way around, they wait for a break and then get somewhere in on the retracement. Euro USD didn't show it too well today, but I know the indices always are there for it. And SPX didn't really do it too much. Well, the market was channeling and got back into a zone of supply before it then broke down. You could have gotten in here, but like I said, it's no confirmation, but then it broke out of the channel, came back right into the push. You understand? This was like your channel on that time frame. It broke through and retested. This is where I would have entered a trade if I was on that chart today. Somewhere in this area, like of that price candle. I would look at something different too, but that would be too much to show now because that would confuse you. It would be different too, but let's actually try it with the gamble, like the 50% push of price that hasn't been mitigated out of. Boom. It's like magic sometimes. So funny. So this is like the break and it's coming back to the 50%. You don't have to get in at 50%. Could also get in here, but know then that, let's say you entered here. Know then that your stop loss needs to be above the last significant high. And then it depends on your ratio. Is it worth it? You could also just set your stop loss to here. The last high candle if you waited for that one. If you went in on the 50%, then you could have placed it above here or here. See how much of a difference it makes where you place your entry and where you place your stop loss? It's just crazy. But let's say you enter right here, place your stop loss there. There you have a nice trade for today. That's what a lot of people do. They just wait for this time period from 2 to 4 and just wait for this to happen. This is S&P 500. You could do the same thing on the Dow Jones. Today was just the other way around, looking for a buy then. Holy crap, this thing dropped. Holy shit. But this is kind of like the same thing. If you took the last consolidation where the market was ranging, you could either say from this to this is your channel. Breaking, this could be a retest, but yeah.
No, yeah.
There it is, just more market structure wise. It broke this level, came back right here to the candle, traced to it. This is a 3-minute chart. This is something where you have to be like in the market with your phone ready. Stop loss already like kind of calculated where to enter. So I know a lot of people that played this today and then just took it all the way down 1 to 3 and they're out of the trades on a 3-minute chart. What's that? 3 hours, 2 hours. I don't like to go that low time frames. I trade 15 minutes usually, like smart money. But that's like how smart money kind of works. You look for zones and you could use indicators that help you show zones. Let me actually show it to you. You can use indicators that help you show demand, supply zones and demand zones to show you what price level is interesting. You could do that. It also shows you break of structure when the character of the market is changing up, but you need to understand what it means. Is that clear so far for everyone, or somebody got a question? Anybody got a question? Or is that, or did I lose you guys somewhere?
For me,
Because
no.
I know this is a lot. Like, I know this is a lot. Like, this topic, like, this is like going down a rabbit hole. I can send you, like, you guys have a, in my playlist, do you guys have my YouTube playlist? I think I sent it already into the group chat once. Because I have one of the videos, I can send it in. This is by the guy I did the NFT with. He actually, you know, learned trading through IM Academy as well. He's on one of the favorite sessions with Rock Humor, and he goes over that style of trading. So I'm gonna send this in so that you guys can watch this video, because he just talks about it as well, and you can rewatch it and rewatch and rewatch it. Because for me, it's important that you understand kind of the topic. And he goes over it pretty simple, with drawing like this, but he explains like liquidity and stuff like that. He has this literally tattooed on his hand, like this for sells and this for buys. Like he has it on the left hand and on the right hand. And the way he trades is he looks at his left hand and looks if he sees the pattern on the market to sell, and on the right hand to see the pattern on the market and buy. Because trading can be that simple. But it's good to get that kind of feedback that some of you guys are lost with the impulse because it shows you too much. You don't know what to do with it, because then I know, okay, let's switch it up. For new people to come on, let's straight away go into smart money. Show them like the deep rabbit hole of trading. So who's still there?
Yeah, me.
I know.
Yeah, I don't want to be an asshole, but
Bro,
I have the
all good.
feeling tomorrow when I go look at the chart, I don't know shit.
Bro, believe me, it happened to me in the summer as well when I lost my funded challenge. But that's why this change of perspective might be a good thing for you. I'm gonna send this indicator in as well. You guys can put it in because it helps you see zones. I don't need it. It's just I have it on with, because when I have my phone, because I have TradingView on my phone, like drawing on my phone is super annoying because it's small. You need to do it with your fingers. It's super annoying. So it's something that you could use. And, you know, you see the market follows its pattern. They first took out liquidity that was over here above those levels by pushing up, and now pushing up down for people that were selling here, here. Because even if people sold here somewhere, they placed their stop loss below those lows. They pushed it down, stopped the people out. People were buying right here because they thought the market's going to go up again. They placed their stop loss at those levels. Boom. Same way as people like me were selling here and thought, well, my stop loss is enough placed above this previous high. And then news kicked in and stopped me out.
Yo, Chris, can you send a pattern from the tattoo again?
Yeah, sure. Wait 1 second. Let me actually rewind it a little bit. Maybe he has it without. See how he draw it in here? Like he zoomed kind of in here. This is the pattern he has for his tattoo. So he zoomed in. This is a sign of distribution. So he did that circle. He did that circle to show, okay, at this peak, you want to look for this pattern
Yeah, so it's just the small, the 1 minute time frame or 3 minute, the break of structure locally,
Exactly.
not the full thing is tattooed.
There's a good video. I think you guys should be able to jump in it as well. It just takes forever to load. Okay, so go live. You guys can try it out. I don't know. For me, it works. So I can still watch FRX Academy. And then you would want to go down to, so Rock Humor is the guy that goes all about smart money concepts every day at noon, and then at 2 days at 8 in the morning our time. And then there's also Zachary Hogan and Jordan Morgan. And there you see something funny now in the videos. Oh, they're live right now.
Away to somebody, you know. Online, my favorite place that I always use is goldeneagle.com.
I don't know what the hell he's talking about. Something probably somebody asking in the chat. This is also a thing. Use the chat if you're on a go live. Ask questions in here because they answer it. And then what they have is, where is it at? Retail Logic, Smart Money. This is a good video. But they have like an older one where they show this here. Swap retail patterns. Second. There it is. Right, what I told you.
Purple.
Can I do this
Maybe an
faster?
entry here. Or an entry here. Okay, purple line equals entry. Okay, purple line equals entry, but the one thing that I need everybody to understand, and we put lots of emphasis on this, is remembering that stop losses, your protective stop, are pending orders too. Okay, notice how entries can be all over the place in the same area, but the stop loss will be around the same spot. This is where your money is. Okay. Now remember back on that photo that I was showing you with the order book. Okay. Realizing it takes a couple thousand lot size to move price, a couple pipettes. If the stop loss is a pending order and everything is a buy or a sell, okay, everything is a buy or a sell, really think about the significance of the stop loss and how important it is to understand what's going on. Because how many times have you ever been stopped out of a trade
Let me make
okay?
it
How many
faster a
times have you
little
ever
bit
been stopped out of a trade?
and just put out the sound quick. So see, this is the pattern that I showed you. Stop got taken out here, stop got taken out there. This is liquidity. This happens over and over again. And with the thing that he was talking about with the order book, the picture, like this is what banks move. Like this is like their lot. This is so ridiculous. Like this is their lot sizes, by the way, guys. This is at what price points certain banks come in and what lot size they use. Like we think we crazy when we use a 10 lot size or something on a trade. Like look at this.
They even throw money in the taking of the stop loss. So they trade against their own direction just to trigger stop losses, and they make money off that.
Yep.
But they still throw a few million in there.
Yep. So that's crazy. Like I just wanted to show you guys this video. Like this is like the same pattern. Like this is the pattern Matt has tattooed on his hand. Like he learned from those two guys trading. And this is the way that you just need to wait for it. So you never want to get in early on stuff like this. You want to wait for the bank to execute the move. And this line down, like you said, Mitch, it's candles. Like, obviously it's candles. So there will be a retracement where you can get into at the market. So you want to get into like, this is a straight line down if you draw it with a line. But this is the retracement where you want to, let me actually delete this trade. And delete this. This is actually the point where you want to get in. It drops on a line chart. It could look like, or if you draw it with a line on a higher time frame, it looks different. Like let's say we go 4-hour chart. You don't even see it on the 4-hour chart. You know what I mean? It's just a straight line on a 4-hour chart. On a 1-hour chart, you see it a little bit bumpy. And the lower you go, you see it more clearer. But you see, this is the same kind of pattern. High, stop loss taken out, dump. It's the same thing you just saw in the picture over there. The same kind of thing. Stop loss get taken out, stop loss get taken out, market coming back up to close their open orders, and then they go. Because what you got to understand is like, the bank is the one always with the money. Brokers have their money on the banks. The bank makes money on everybody. The bank's always winning. So you want to understand what they're doing in the market. But we can switch it up to more that kind of style. Let me just check Luciano's questions if we answered them all.
Maybe it's also so good to explain like the language they use for bank, currency, liquidity. Like if you have currency, like it's see it as water, you know, like a river. What moves, yeah, I don't know the English word.
Say it in Dutch.
Wat bepaalt de hoogte van het water? Zeg maar de kust, de kade, dat is de bank, snap je? So the
Yeah.
banks, they move the
The
currency.
water level,
They
the
decide how
water
high the
level.
currency is.
Yeah,
The liquidity.
yeah.
Maybe that helps.
Yeah. I understand what you mean. So basically, if we take a bucket, this is the bank. And let's actually take a different color quick. And this is the money. So there's the color thing. So this is the money. Let's actually make it blue. So the banks decide how high the money is gonna be. They move it because they fill it up or fill it, like empty it out. That's how you could see it as well, like as a cup of water.
Yeah. It's not called a bank for nothing.
Yeah. And that's how banks make money. They use your money to push currencies up or down, and they make money on that. If you have your money on the bank or not, that's what they do with your money.
But how does the bank knows where our money is?
So banks have way deeper trading software and technology. This is like, if you would compare TradingView to like the thing banks have, this is like your bicycle with helping wheels left and right. Like banks can actually make the candle look like how many orders there are at what level. They can look at your order books to see the real volume of the market. The only tool we have kind of to see how many people are buying and selling is this. So this is called the fixed range volume profile. There you could see at what price level, how many people are buying and selling at certain price levels. Banks can see it in the candle. Banks can really like open the candle up. They have software for that and see how many people are, like how many orders are at what certain price level. They can see the order books, what you saw in the go live here.
Footprint, right?
Yeah, the footprint.
Order flow.
So this, the banks can always see. For Forex trading, we normal people can't see it because we don't have access to that kind of information, or you got to pay a shit ton of money to get access to technology like it, or you need license to get access to stuff like that. For crypto, you can do it. Order book, Bitcoin, for example. So there's certain exchanges that show you their order book. Let's
Also,
see if-
Chris, if you're interested, have you ever heard of Atis?
no.
That's it's free for crypto. Order flow program.
Oh, nice.
Maybe if you need a Windows computer, or yeah, it's
I
also
got a
possible.
Windows.
Yeah, so maybe you can take a look at it.
Oh yeah, sure. If you want to send me some info. So this right now here, like this is, so this is all orders of Bitcoin that are going right now. Like this is right now the order books. So you see when at what price people are buying and selling. This is all buys and sells on Bitcoin right now. And you can see how big those are, like how much total US dollar. And you see there's some higher ones in there, like 26,000, 25,000, 24,000, but also people selling on the other hand. So banks can see this for the Forex market, basically.
Yo, Chris, I gotta go, man.
All
Okay,
good.
well,
We've been
thanks.
on for 90 minutes already. I'm gonna check if anybody else has a question. And if not, I'm gonna say goedenavond.
That's clean.
Anybody else got any questions? Right now is the time. Like we get there. If you want to learn how to trade, we're gonna make sure that you learn how to trade because it is possible. Doesn't matter how good you are with numbers or whatever. Trading is not that difficult. Anybody else? Jamie, Andrew, is everything clear for you guys? Or Mitch or Luciano, you got anything else? Mitch, you just look done, bro.
You understand it.
I'm done, actually,
Okay, all good. Let's talk later.
because I try to understand, but I don't understand